Volatility, the VIX. Something extraordinary is going on here. The market had a good day today. Didn't blast higher, but it was a good day for stocks. So I hope you made money out there today. You should have definitely been a money maker. The VIX was up 8.5% here today, folks. 8.5%. It's a huge move for the VIX. And usually you think about the VIX, you think, okay, the VIX is going to blast higher if there's major downside in the market's crashing, market has a big, huge down day, people are loading up on put options and short selling, you got just a crazy amount of volatility, a lot of people are cashing out shares. Yeah, sure. That's usually what you think about when you think about the VIX going higher and higher. And then today we had a very solid green day out there and the VIX moves up 8.5%. So what's going on here with the VIX? Let me show you something very interesting, okay? So, from November 2020 through January 2021, the VIX moved up substantially. The VIX went from about 20 to a 33 plus going into January, okay? So it was this massive move up in the VIX during that time. Now, it's being such a huge move in the VIX like that, that's well over a 50% plus move. It was like a 60, 70% type move from where it was in kind of like, let's call it late-ish October through the beginning of January there, okay? It's huge. That's a massive move for the VIX. So you would think like the market had to have gone down during that time period. Well, I'm going to show you something that maybe says something a little different, okay? This is the last 9 weeks of 2020. In the last 9 weeks of 2020, the Russell 2000 went up nearly 36%, the NASDAQ went up 23%, and the S&P 500 went up about 17% in the last 9 weeks of 2020. It was phenomenal, right? That was our last kind of like blow off the top scenario, and then it started to get bad from there, essentially, okay? Because after that, then basically starting about February 2021, small cap stocks started falling, more speculative stocks started falling, right? And from there, it was the mid caps. Then at the end of 2021, we started the large cap fall. Then throughout 2022, it was almost everything in the market other than maybe oil and gas stocks and the safety stocks were falling. And so it was just vicious. So the fact is, you can see the VIX spike and you can see the market going up and up and up and up in a huge way if you get a massive move up. And so I have actually been thinking about this a lot recently because I've seen a lot of market participants. It's expensive if you want to buy VIX calls. I can tell you it's extremely expensive. And so I'm seeing this, I'm like, what are people seeing here? I'm like, or is everybody convinced the market's going to crash? Because that's what you usually think about. VIX spiking, the market's going to crash, right? And I'm like, why are these VIX calls so damn expensive? It's out of control. The premium you have to pay is ridiculous for these VIX calls right now. And I'm like, clearly somebody sees something brewing here that's going to spike this VIX massive. And so I keep thinking about like the negative side, right? Like, could something bad happen here? Or, something black swan event out of nowhere? Is something bad going to happen in the economy that all of a sudden gets announced? I'm trying to run through all these negative scenarios. But the one thing I hadn't really thought of until today is, maybe they're playing all these VIX calls because they're expecting a epic move up in the indexes over the next few months here. Specifically, Russell stocks and a lot of these stocks that have been laggers catching up to the market and catching up to a lot of these big guys that are performing great. I hadn't even really considered that until today. And now I'm like, maybe this story is starting to pay attention. So do keep in mind, folks, that if this market starts really rolling in a major way, just keep in mind that VIX could roll right alongside it, okay? It doesn't always have to be down when it comes to the VIX, okay? Now, in terms of stocks I own, two stocks that are taking the cake all of a sudden out of nowhere. One's Fubo. Fubo was up another 15% here today. From my understanding, they were part of an upgrade that really, I think, focused a little more on Netflix around advertising and kind of their advertising business building out, but Fubo is kind of obviously a much smaller player in the streaming space. So that stock did terrific today, up another 15%, and that's just kind of like a little hidden gem in the market. It's a super high risk, super high reward type stock, obviously, in the market, right? And that's why it's a $2 stock. Honest has been moving up huge lately, up another 13% here today, which is strange because that stock was up huge yesterday as well. Like huge yesterday. I believe yesterday was like a 12% move or something insane. And so with Honest, I am wondering, there's going to be somebody with some money buying into the stock, specifically with the move it's made in the last couple trading days here. And I don't know what they're up to there. Honest is trading extremely cheap on a price to sales ratio type metric. I know Carla, the new CEO, she was out there mixing with, I think, a lot of prominent business people, it looked like, this past weekend based upon her Instagram stories. So I don't know. You never know what could be talked about or not talked about, and who's all of a sudden buying in. I don't know. All I know is that the company trades at an incredibly cheap price to sales ratio versus their competitors. And it's kind of just a stock floundering that people are trying to figure out, like, what's going on here? Is this a revenue growth story? Is it a profitability story and a margin story over this next few years? And so there's a lot of confusion there. Until there's more clarity, it's hard to get that stock, out of the gulag, which is, the gulag is above $5, right? But clearly there's something going on there. That's all I'm going to say. Like, you don't get the sort of move that happened yesterday and the sort of move that happens today without something going on there. And traders aren't going to play a stock like Honest. It's not even worth their time and attention. It's too small of a company, too not talked about enough of a company. There's no arbitrage there, and it's too big of a risk because there's not enough shares usually being bought. So with a stock like Honest, if there is somebody buying in, which there has to be to get these sorts of moves the last couple of days, it's somebody buying in because they plan on holding this long term. So I don't know, man. That's just a kind of a crazy situation there, and we'll see how all that trades out. But obviously, they got a lot to prove over this next, I would say, several quarters to shareholders like myself and other folks that are looking at the stock and like, I don't think I want to buy it yet until the story is clear enough. They got a lot to prove there. Fubo does as well. Fubo, I think, is just in a little better position than something like an Honest because they actually have these amazing growth rates and whatnot behind them. So yeah, now this matters in a significant way, folks. Okay, significant way. Health insurance stocks slide after United Health warns more surgeries will drive up medical costs. Health insurer stocks dropped after United Health Group warned higher medical costs as older Americans start to catch up on surgeries they delayed during Rona, right? Because a lot of people were kind of freaked out during Rona. They didn't really want to go to the hospital. They didn't really want to get surgery. So a lot of people put off surgeries that they honestly need. They've been putting off those, and that's coming to an end now at this point in time. Shares of United Health, Humana, Elevance Health, CVS all declined. Insurance companies have benefited in recent years from a delay in non-urgent procedures, but that trend may be reversing, right? And this is just one of many reasons why I felt like if I wanted to play against an index for a hedge this year, I wanted to do against the Dow. And it's been 100% the perfect play. The NASDAQ, you have not wanted to work against that. A lot of people try to talk me into betting against the NASDAQ. I'm like, hell no. No way, okay? S&P 500, no. The Dow's made it was by far and away the best choice for me if I wanted to work against an index for a hedge. And one of the reasons was I looked at United Health. It's by far and away the biggest weighting. And United Health's been making money hand over fist, okay? This has been actually one of the best stocks in the Dow Jones for the past 5-10 years. Stock's been doing terrific. It's a healthcare company. What I can tell you in regards to healthcare companies is they are not seen favorably when they are making money. If you're NVIDIA, you can make as much money as you ever want, and no one's going to judge you for that. If you're Apple, you can make as much money as you ever want. When you're what is seen as a need, as in healthcare, there's limits. And when you start making too much money and you're in healthcare, the government's going to come after you, okay? That's a whole other risk that's still out there for United Health. But now they got this other risk of like people basically going in for these procedures that they just hadn't been going in for before, right? And next thing you know, the health insurance company has to pay $30,000, $50,000, $100,000, $150,000 for these surgeries that, people have just been kind of pushing off because it wasn't like it was urgent. It wasn't life or death. It was kind of like, this is very inconvenient. Now I got to go get this, okay? And that's a huge issue, and that's going to be an issue for kind of the Dow, at least in the short term here. And so that's just something to kind of keep in mind in regards to that, okay?